Good afternoon, everybody. It's Wednesday, so here we are with a quick video for you, a bit of a roundup of what I'm looking at in the markets, what's been the story of the week. Probably this silly Bitcoin business, which is just another bubble and already is having that sort of bursting type of appeal to it. I've just had one eye, half an eye on the prices of these things, just out of interest. I'm not trying to trade them. It's ridiculous to even think to do that, I believe. And yeah, got up to 900 yesterday. That's when I don't know whether you've seen this, is something I put together last April when prices of Bitcoins went from 100 to 250 and then straight back down again. Well, this one's not going away. 900 yesterday, 470 today, 575 as we speak. It's certainly chopping around, but maybe not in the exosphere anymore as per our chart there. Remember when gold was at $1900 and everyone was talking, well, Goldman's actually as well, particularly talking about $2,500 gold. What happened to that call? It's now 1200. And that's been something we've been short on for a while, and we are getting close to some support levels. Chart behind me shows gold at 12, currently last trade 12.58, getting very close to our 12.55 target that we suggested on a short trade for clients last week, and very close to this low from the 15th of October at 12.51. What happens below there? There's our next big low. It's the year's low. It's the end of June low at 11.79. So I always like to have a look at gold for it because it seems to be one of those that everybody's interested in. Shorted the Aussie dollar at the end of last week and got stopped out. Shorted it again yesterday. And thought I was almost going to be stopped out within minutes of having the trade on, because I think we got filled just as the PBOC announcement was going to come out. Fortunately, stop was at 94.55. We've been close to that twice since, but are currently back on side on our short at 94.15. It's trading sub 94 and has been as low as 93.65 today. And the reason why I'm looking at that is that I think we've got an area of resistance here, 94.25 to 94.50, and that's where we seem to be failing. And if you go to the intraday charts and add on to there the volume profile, which is something I'm going to do a tutorial on this soon, because getting a bit of interest in this, and it's it's an increasing part of our analysis here at FuturesTechs on Sea, as we call ourselves these days. So let's see if this thing will put the volume profile on for me, and I can show you what the thoughts are. Sometimes takes a while to. Sorry, right, let's do this. Just got to change a setting. There we go. So you can see why I think Aussie dollar is going to head lower. It's heavy. There's a whole heap of volume went through here, and we've gone into this low volume area here and then fallen over, and we've come back to this high volume node here around 93.80. And so the next thing for that to do is to break here and head down to the next one here at 93.25. Idea being that the price attracts, volume attracts price kind of thing, and that these high volume nodes are can be very good support and resistance levels. What else? So yeah, gold getting close to support. Euro seems to be stuck in a bit of a channel at the moment. You can draw a fairly simple line on that thing and just there, and just keep an eye on what's going on with that. I did want to talk about the yen crosses actually. Okay, so where is euro yen? It is not on here. Okay, let's do a new chart. Why they're in the second plurals. Euro yen for a long time struggling with resistance here at 135, 135.50, and there's a couple of failures there. 22nd of October, 30th of October, came back up to it and fell over a couple of days ago. Went through it and closed above it yesterday. Now, ideally, from there, you just ramp sky high and off you go. That's a breakout trade. Let's get on it. Hasn't really happened like that in this instance. There's our line at 135.50, and you can see we've dropped back below it overnight. But again, if you go to the volume profile, we add that on there, and it's not on there, so I'll have to do it again. And again, I'll have to change the study parameters, will I? Because this is playing up. Okay, look, we've come back. We've got a couple of what we call high volume nodes on there. One around here and one right down here, 133.25. So, and this is 135.25. And we've been down to there. We've posted a little doji there on the 30-minute chart and rallied. So, you know, there's some interest. There's clearly some buying interest around these levels in that particular thing there. And so I'm fairly confident we're long of that, and I'm reasonably confident that we can stay long of that, and everything's going to be fine. So one last thing I wanted to share with you. I have suggested to clients today that the Nasdaq's looking heavy, which is a bit of a brave call, or stupid, one of the two. I've been known to be both. Actually, usually more stupid than brave. But well, look, we've got an outside day here, Monday. Okay, with a higher high, lower low, and lower close compared to Friday. And then we had a Marabouzo resistance on that red candle at 34.00, and that was yesterday's high, and we fell over from there. And so far today, I think because we just had the US numbers out, we've started off strongly. I wouldn't be surprised to see 34 even capping upside again. We'll keep an eye on that situation, and I would tentatively put on a short in that one, although maybe one, you know, if we're back, as and when we get back below that this uptrend line that we're looking at there. Another reason for this is the RSI, which is downsloping. Okay, you can see that on there. The RSI topped out on the 30th of October, 72. Back then, price topped out at 34.01. We made a new high for price, made a lower high for the RSI. That's a bearish divergence in indicator terms. It's the momentum study saying that the second push to new highs didn't really have the oomph behind it of the first push. Actually, with RSI, Wells Wilder developed something called a top failure swing pattern. And again, this might be saying to me, hey, hang on, hold your horses, you shouldn't be doing this trade yet, you should wait. Wait for the RSI to drop below 51, which is the low between the two divergent highs. So that's probably, yeah, that's something else to be keeping an eye on as well. Are we to see a RSI closing reading below 51 to give us a top failure sell signal and back up what the candle is saying, that that thing needs a pullback? If it has a pullback, here's the first real area of interest. It was the 8th of November low at 33.10. It's also a short-term 38.2 retrace, and actually if you were to look at the primary session chart, there is a gap. This back here on mid-October, there's a gap at 33.05. So 3 reasons to think that 3300 to 33.10 is strong support area. But I quite like the idea from a risk reward point of view of having a go, shorting the Nasdaq around here. 25 tick stop, 20-25 tick stop is all you need. Potential target of 70-80 ticks if we see a pullback. Why would we see a pullback? Ridiculous thing to even conject about in these days of buy the dip and everything's okay. You know, as long as the Fed's buying every day. Well, sorry, seen it all before. Typical sort of, well, it feels like it's those times where, you know, the old classic phrase, no-brainer, starts getting used. Oh, you know, just buy a dipping equities, no-brainer, don't worry about it. Yeah. Okay, yeah, good luck with no-brainer trades. My experience is that as soon as you hear lots of people talking about something as a no-brainer, that's generally when you know, the real brains are getting out or not involved. So hope there's something in there of use to you. A bit rambling today, sorry, it's been a bit of a strange day, and maybe I'm not quite as well prepared as I'd like to be, but I'd like, hopefully you know, you can get something from the last, goodness me, 10 minutes. Yeah, that's going on. I'm rambling now then, clearly. So and finally, if you are interested in our service and you are not a client, then please feel free to get on the website and ask us for a free trial. We cover commodities, equities, bonds and foreign exchange, and yeah, hopefully have something for everybody, and just try and keep it simple and look at the key points on the charts without too much jargon being involved. So you know, have a look, give us a shout. Thanks very much. See you later.